All right, well, my next guest is a well-known financial commentator and is the chairman of the Gold Antitrust Action Committee on the web at gata.org. That's gata.org. His name is Bill Murphy. Bill, it's a pleasure to have you with me today on Follow the Money Weekly.
Great to be here, Jerry.
Bill, you have been tirelessly working for years to expose the suppression and manipulation of gold prices. Why don't we begin by having you explain to our audience what exactly are you doing at the Gold Antitrust Action Committee?
Well, my colleague Chris Powell, the editor of a daily newspaper in Connecticut, formed GATA in January of 1999 to expose the manipulation of the gold price by the big bullion banks, which we realized later extended to the Fed and the Treasury and other governments like the Bank of England. And we've been at it for 12 years and recently been making great strides in exposing this fraudulent scheme, and that affects all Americans, and many of them probably don't know why yet, but hopefully we'll get into that today.
Bill, how does the manipulation of gold prices affect the gold market, and who have you identified as the main players who are working behind the scenes to suppress the price of gold?
Well, it's a lot of the bullion banks. It used to be, the ringleader used to be Goldman Sachs, but they've disappeared the past year, and now two of the ringleaders are J.P. Morgan Chase and HSBC. In addition, as I mentioned earlier, we got the Fed and the Treasury that are very actively involved, and probably the IMF and the Bank for International Settlements, in working together in coordinated fashion to keep the gold price much lower than where it would be if we had a free market. I've been at this for many, many years, and some people will say, well, geez, gold's been up 10 years in a row. They're not doing a very good job. But as we'll get into, that's not the case. What they've done is, all they're doing is a managed retreat. They are trying to keep excitement out of the market, not getting to extend and expose some of the things that are really going on in America. So it's while it's been 10 years of advances, gold has a long way to go.
Most people are just interested in buying gold, or they're trying to protect their assets. They may not fully understand why the big banks are so interested in seeing the price of gold suppressed.
Well, it's the big banks and the U.S. government, because what happens every time the gold price really shoots up is talk about inflation, too much inflation, a dollar problem, a crisis, financial issues. It's negative for the main business of the bullion banks on Wall Street. In addition, which we probably won't get into today, but they're really leveraged. They've taken in a lot of gold from a lot of different sources, and they've what they call unallocated accounts, and they're just using all this money because people don't ask for their gold. It's like a fractional reserve system, and they're exposed enormously should the price accelerate too much, too fast, and stay there. In addition, the Fed and the Treasury, Alan Greenspan spoke of it years ago in the Fed Minutes. He called gold a thermometer, and they can influence perceptions by keeping the gold price lower than it would be for the same reasons. They want it. It has to do with the dollar. It has to do with interest rates. Lawrence Summers, President Obama's financial advisor, wrote a paper about that at Harvard, about the relationship between gold and interest rates. So the U.S. government wants to keep the gold price as contained as possible, and they've been doing so for a long time. Many years ago, we all know the price was fixed at $35 an ounce for years and years and years. Well, now they're trying to, quote, fix the price, rig the price, but do it surreptitiously.
Based on your research, Bill, how much has this price suppression affected the price of gold? In other words, if the price of gold was not being artificially suppressed, what price do you think gold will currently be now?
Well, a good thing about this one, it's a great question. You don't have to go with what God has to say. You'll commonly see nowadays by other financial commentators that had the price of gold kept pace with inflation, it would be $2,300 an ounce. And today it's about $1,200 an ounce, $1,225, $1,230, whatever. And that's how much they have suppressed the price. But right now, demand for gold is soaring all over the world, with central banks like Russia and China and other countries, and the big money, big hedge fund managers are moving into gold. And while you hear a lot about, well, gold's a bubble, it's too high, actually it's just the reverse. If you think of it like a rubber ball that the government has tried to keep it underwater, it's just getting ready to go accelerate like crazy. And this is what is so important about understanding the gold price suppression scheme, because I read all these commentators, I've been going through this for 10 years, well, gold, this, that. It's way underpriced. It's artificially suppressed. It's going to go berserk, and especially with the problems that most of your listeners are reading about today with the trouble that our government has and all the issues I'm sure many other people discuss in your program.
Well, gold has, you're right. I mean, gold has gone up an average of 18% over the last 10 years. The demand picture only appears to be increasing. There's increasing industrial demand, there's increasing investment demand, and as you mentioned, there's even this growing demand from central banks from around the world.
Well, and Jerry, if I might add there, that's the demand side, which is so true. What people also might be helpful for them to realize is the supply picture is waning like crazy. There was an agreement among European central banks where they could sell 400 or 500 tons a year. Since late last year, they're selling nothing. And the gold cartel itself, the central banks, people think the central banks have 30,000 tons of gold, but they don't. That's another a big news event, which we're trying to get out there. They have less than 15,000 tons of gold. They are now the central bank available supply as part of this gold price suppression scheme is on the wane. The IMF is running out of what they can sell. Other banks don't want to sell. Central banks are buying. In the meantime, mine supply is going nowhere, and it's going to take years and years and years to ramp up the mine supply to meet the growing physical market demand.
Bill, you bring up the supply. Talk to us about some of these rumblings that I've been hearing from the precious metals industry that the U.S. Mint has been cutting back on the gold and silver orders that it's fulfilling. Talk to us about that. Is that a supply issue as well?
Yeah, well, actually, yes. What they're trying to do is slow down demand, and so they're cutting back on coin sales, and whether it's silver and gold, and because the demand's just too strong. And supposedly, as I believe, as far as our Constitution, they're supposed to meet that demand whatever the American public wants. But they've come up with certain issues where they say they don't have the right machinery to make the coins and all this stuff, which is just nonsense. They've been saying the same thing for years and years. It's just they're trying to slow down demand for the American public, and as part of the demand surge. And quite frankly, gold is really just getting on the radar screen for most Americans. While demand is way up, I bet you if any of your listeners asked 10 people how many of them own gold or silver, they'd be lucky if they got one. So that's how far we have to go before this thing goes into what we call a real bubble.
Well, and gold currently is just over $1,200. You're saying that the real price should be closer to $2,300. Where do you see prices going in the future?
Well, God has had 3 international conferences that we began in South Africa, Durban 2001, Dawson City in the Yukon in 2005, and then in Washington in 2008. And at the conference in Dawson City, which was just fabulous, we had one of President Putin's top economic advisors from Russia show up, said it was the finest conference he ever went to, and 2 days later the price of gold exploded. I don't know if that was a coincidence, but that's what happened. And at the conference, I said with gold at $436, I said I felt it would take a price of $3,000 to $5,000 in the years to come to clear the market. And so I'll just stick with that assessment. Although nowadays, all these years later, 1,200, many people think that's too low, and it probably can go much higher than that. But if it goes to $3,000 to $5,000, there'll be a lot of happy campers among your listeners if they're investors.
You know, I obviously your expertise is in the gold area, although you are a well-known financial commentator. Talk to our audience about what you see in the current quote-unquote recovery that's going on in the nation. We are seeing comments. We just had Gerald Celente on the program last week saying, we're obviously moving into a much greater depression ahead. There seems to be still a debate about deflation, inflation. Where do you fall in that whole argument? What do you see heading forward from a macroeconomic perspective?
Well, I guess I'm prejudiced. Either way, it's bullish for gold. The problem is the situation is worsening terribly. I mean, all the economic statistics, especially the jobs arena and real estate arena, it's just awful. And they've already shot a lot of bullets in the sense of, monetary stimulus, fiscal stimulus. I know right now from my sources that the Fed's in a panic because they're concerned about a collapse in the dollar. They have to quantitative ease, which is a commonly used term, but with the elections coming up in 2 to 3 months, Larry Summers and his gang advising the president have to be going bananas trying to figure out how to turn around perceptions that things are going to get better. And right now it's a common perception that things are getting worse, and they are getting worse. So they're going to have to step on the gas. I know for a fact, at least from my sources, they're trying to hide what they're doing, which is why we've had a recent pop in the dollar. But they're going to step on the pedal. And where you might have a combination of both, where commodity prices, which are holding up tremendously, even though these markets have been a little bit in trouble, are probably going to go bananas in the next year. And I think silver and gold are just getting ready for an acceleration phase. At the same time, you can have housing prices and other assets continue to deflate. So it's actually the worst of all worlds for the financial scene.
Well, and there was some news that came out the other day about how China was not buying U.S. Treasuries. In fact, it was a pretty bad news story. Obviously, this nuclear quote unquote threat that China has by owning our treasuries is obviously something that economists are watching. But there was an interesting note in this article I was reading that basically said that instead of buying U.S. treasuries, China was buying Korean treasuries of all things. So what's interesting here is that we're seeing this slow demise of the American economic empire. We're seeing a descent of the dollar, and now some are calling for a return to a gold standard, like we used to have, several decades ago. What do you think about a return to the gold standard? Is that the solution to end all solutions for our economy?
Well, first of all, there's two key points there. I get asked that quite a bit. There hasn't been an audit of U.S. gold reserves since 1955, in the Eisenhower administration. We don't really know how much gold the U.S. has left. I won't get into all the details about swap operation and this and that. God is suing the Federal Reserve under President Obama's call for transparency about what the true status is of our gold reserves, and they won't tell us. They say that they have a right to make it secret. Well, it's supposed to be the Americans' gold, and why that has to be kept secret is only one reason, because it's probably not there. So they think we have 8,134 tons of gold. We think they have probably less than half that. So that could be a tough maneuver. And second of all, GOTA stands for a free market. I don't know what a gold standard would do or not. I'll leave that to others with a higher pay grade than mine. But we just want the gold market to be traded freely so that Americans can see what's really going on in our country. I know we placed a $264,000 ad in the Wall Street Journal before the financial crisis, January 31st, 2008, color ad saying because of the manipulation of the gold price, we see catastrophe and disaster coming. And that's exactly what has happened. And your listeners can look that up at GOTA.org and see what we wrote. No one paid any attention.
It's just astounding. And there's many advisors out there today, financial advisors, who are kind of in a quandary what to tell people to do. It must be a very difficult thing to be in that position. As far as, obviously, you're not here to dispense financial advice. We'll leave that to the financial advisors. But from your perspective, and maybe even in your own opinion, what do you think about the different asset allocation models when it comes to precious metals? Owning 100% obviously would be probably imprudent, but what do you think about a proper asset allocation for gold for the average individual investor? Do you have a comment on that?
Oh yeah, I mean, of course I'm very prejudiced here because we've been writing about gold for 10 years, and first I'd like to mention that silver is going to probably explode because J.P. Morgan and friends, and you're going to hear a lot about, your listeners will hear a lot about this in the coming year, but playing games with silver, and it's just explosive. But owning gold and silver, obviously, I think it's going to 3,000 to 5,000. Just going to be tremendous returns. I mean, the last 10 years, gold owners have made money every year, while the Dow's done nothing for 10 years. And I think that the real move is just beginning. There's a sector that's been maligned for the past 2 or 3 years, even though gold has gone up so much, and that's in a lot of junior gold stocks and exploration gold stocks, and just a combination of looking into the gold and silver stocks and gold and silver bullion. I think make your listeners will be very pleased in the years ahead, and at least getting a certain amount of their assets in it will give them some comfort when everything else is going in the tank, that they have some things because of it that are going to be on the move. Now, that said, I think everyone should do their homework about what I'm saying and look at our track record in this area and what's going on, so that to do their own due diligence.
Well, Bill, thank you so much for joining me. If our listening audience would like to learn more about you and your work and find out more about you personally, how can they do so, sir?
Yeah, well, that's what I do. I write on a website, Le Metropole Cafe, LEMETROPOLE Cafe.com, and if what you heard today is interesting, you can sign up for a 2-week free trial and take it from there.
Excellent. Thank you for joining me, and I hope to have you back soon.
Thanks, Jerry. Enjoyed it very much.